Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 8th of August 2015, and in this video we're going to mention the US labour force statistics announced yesterday and their impact on precious metals. According to the US Labour Department, job gains in July fell slightly short of expectations, and the unemployment rate did not budge from June. American companies added 215,000 jobs for the month, slightly below Wall Street's expectations of a 225,000 increase. While unemployment remained at 5.3%, and the labour force participation rate remained flat at 62.6%. its lowest level since 1977. In addition, the Labour Department also revised its May gains up to 260,000 from 254,000, and June's gains also up to 231,000 from 223,000. In response to these figures, economist Paul Ashworth of Capital Economics said, "It is easily enough to keep the Fed on course for a September liftoff." Chris Williamson, chief economist at economic survey firm Markit, said, "The data highlights how the labour market continues to tighten alongside a steady improvement in the economy, arguing for rates to rise later this year and possibly as early as September. Furthermore, the downturn in the economy at the start of the year has been revised away, removing nagging doubts about the robustness of growth that will have deterred policymakers from hiking rates." He does add, however, that a rise in September is by no means a done deal, and that any tightening is likely to be modest. According to the Financial Times, traders expressed more confidence that rates would go up next month, with federal funds futures implying a 58% probability of an increase after the US Central Bank next meets. Ethan Harris, an economist with Bank of America Merrill Lynch, said, "The report underlined the improvement in the US economy since a lackluster first quarter. The rise in workers' average weekly hours from 34.5 hours in June to 34.6 hours in July was the equivalent of adding 300,000 jobs." Rob Martin, an economist with Barclays, said that the Fed would now have to see hugely anomalous retail sales, housing figures, or jobs data over the next month to push back a rate rise. So, with the consensus of the financial community expecting a rise in rates in September, and most certainly this year, how did gold and silver respond? Well, on Friday, after the announcement, gold rose from a day's low of $1,084 an ounce and ended the day at $1,094, but still $1.49 or 0.14% down on the week. Silver rose from a low of $14.50 and closed at $14.82, a rise on the week of just 3 cents or 0.1%. We expect these rallies to dissipate over the coming weeks and to return to a downward trend throughout the month of August-September, though there is still likely to be some short-term volatility while these factors are being assessed. Now, we are aware that many in the YouTube community do not believe that interest rates will rise at all, and whose cheerleader is none other than Peter Schiff himself. Our take is slightly different. The Federal Reserve has to maintain credibility in the dollar and in their control of the economy. Therefore, a nominal rate rise is imperative, even though it may only be 0.25%. The question is, will it happen in September or December? All data currently points to 0.25% rise in September, with the threat or promise of another similar rise in December, which may or may not happen. If there is no rise in September, then a 0.5% rise will be threatened for December. We shall deal with this issue again closer to the time. We hope you liked this video and found the information useful. If so, please give it a thumb up, comment, and if you haven't already done so, please subscribe. Also, it would be helpful if you could share this on Twitter and follow us at Illuminati Silv 1 and become a friend on our new Facebook page, Illuminati Silver. Disclaimer. Silver Illuminati owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.